Welcome back to another video. Appreciate you being here. We're just going to get right to it. Go over some market updates, go over SPY, go over Qs, and some of our favorite stocks and things that we've been talking about in our last videos that we've done before. So yeah, let's just get to it. Doing some live analysis here. Some of these charts I have not updated for a few days, so let's see what they're giving us. This is SPY, first of all, and we've talked about SPY in the past. This old trend line that broke out, retested, had a big launch, and we have had another retest here. It's been a crazy past couple of weeks in the market so far this year, just with headlines and news just breaking all the time and causing the market to do crazy things. So it's been interesting to say the least, but it looks like just overall SPY is still heading in a positive direction. It's going well. These retests, this trend line here, we've talked about trend lines and how getting these retests is usually a bullish signal, and the last two daily candles look really nice. They're nice and green, nice and large. And then just kind of looking at things now, if we draw another trend line here, we could be seeing a falling wedge, maybe a flag type pattern playing out. It could be a more of a megaphone pattern playing out, where it kind of bounces in a larger range before more upside. But either way, I mean, if we draw it this way, if we draw it this way, it's bullish one way or the other. So not seeing a whole lot of negative or bearish signals with SPY here on the daily chart. And if we zoom out and go to the weekly chart, it's nothing really too bearish either. The retest candle from last week isn't the most it's not the most bullish candle, but it is a bullish candle nonetheless. And so far this week, we are developing a nice looking bullish candle. The EMA lines that we've talked about, this blue and orange line, those have been holding and acting as a good support system for many weeks now. If it breaks underneath this blue one, this darker blue one, or the purple one, then we can start thinking about being bearish. But really, on the weekly chart, this actually looks even better for a bullish pattern. If we draw the trend line here, yeah, it's looking good. Let's go over to Qs, the tech ETF. So we have talked about the Qs before, and it's kind of given us a better signal. We had this trend line already drawn for a flag type pattern potentially playing out on Qs, and the SPY doing kind of a very similar thing here. Tech has been struggling a little bit more than SPY has been recently. The news and headlines have kind of hit the tech stocks a little bit harder. We thought maybe I thought tech was going to have a little bit more of a run up versus SPY, but either way, tech is still bullish. You can see how these EMA lines are closer together here versus on SPY. They were further apart. If we zoom it out here, I guess they were a little bit closer together on the weekly chart here. Let's see. Yeah, very similar here. So yeah, overall the entire market is looking fine. We're chopping around in a zone, which is making a lot of people kind of wonder, what's happening, what's the market going to do overall. But for now, things are looking overall net bullish. So let's just jump into some individual stocks, some popular ones. AVGO is one that we've talked about quite a bit. One of the chip stocks that's been pretty popular, and we had this trend line drawn, and we had talked about how it had had a good retest, and come back up here, and then the news just sent it way down. And now we are still in a overall bullish looking pattern, in my opinion. It's just a large flag here that's been forming. So the price could chop around a bit more before more upside. It could chop all the way down here. There's a gap from the last earnings all the way down at 185. And it could easily chop in this flag that's forming all the way back down. So it could chop for a while. Really, the overall market, tech, and legislation and how things go in the country over the next several weeks and months are going to dictate pretty heavily on what happens with AVGO. And if we kind of look at what other chips are doing, like AMD, for example, who just had earnings, and it is not looking pretty for them after hours. Oh my goodness. We are all the way touchdown 106. We're probably seeing $100 tomorrow. This stock has just been taking a beating. We've talked about it before. It is not a bullish looking stock right now. There's nothing bullish about it. See these EMA lines that we've been talking about for the other stocks? See how the EMA lines, the purple, the blue right here, the price and the candles are all underneath those lines. So that's why I'm saying overall this is not a good look. It's a very bearish stock. And this bear flag that we have drawn out here, this orange line and this orange line here, the measured move from the bear flag breaking down, our target was around 90 bucks. So that's when I might be looking to buy AMD. But for now, it's not looking good. We might get $90 sooner than later with earnings seeming to not look great and sending the stock down. So we'll see what happens for the rest of the week, but not looking great. Let's take a look at NVIDIA, one of our other nice favorite chip stocks that we've talked about before. And NVIDIA is not looking great either, to be honest. We've been talking about, first of all, the head and shoulders pattern that is formed here. It definitely played out to the downside, and it was kind of fairly obvious looking back at it how this large red candle right here being a part of the right shoulder. This is a bearish engulfing candle. What that means is the candle is bigger than the day prior, and it's red, meaning it's been a selling day, and that's just an overall very bearish signal. And then it broke down underneath the big wedge that we've talked about in prior videos. So this white line right here that goes all the way across, and then this bigger white line that's a big major trend line for a long time. These rising wedge patterns, you can see how if I connected it all the way up here, it would form a triangle or a wedge. These are typically bearish patterns, and they play out to the downside. And we talked about how that was probably going to happen, how this blue trend line had not been retested yet. And we said that it was probably going to get retested somewhere down here around the $100 mark. You can go back and look at my other videos. I've got proof saying this is exactly what was going to happen. I personally have been buying shares ever since it started hitting the 125 and under mark, and I will plan to continue to buy shares when I can until we hit that $100 mark and maybe even lower. But I expect to hit this trend line at some point, 100 to 105, and then see it kind of bounce back up. And it's going to retest to the upside of this rising wedge. It will eventually. It's going to come down, and then it's going to come back up and touch it. And whether or not it breaks back up for more upside, or if it touches it to come back down again, it very well could. But for now, this video is going to be proof and evidence. It's going to come down. It's probably going to see the 105 to $100 mark before rising back up. We'll revisit this, but for now, my personal plan is whenever we get close to that mark of 105 or less, I will be buying a lot more shares and just dollar cost averaging, as it is referred to, or DCAing, just slowly accumulating more and more shares at various prices that I'm comfortable with holding them, because I know that in the long term it will be worth a lot more. So let's take a look at Google. Google just had earnings too, and it was looking great. This had broken to the upside over the past day, kind of came under, retested, and then broke out again. It was looking positive for a big move up, and then it had earnings, and it had just got stomped all the way back down to the bottom area of the trend line, which not the worst thing in the world. But so right now the price is sitting down here. It needs to hold above this blue trend line for the rest of the week. Well, we're probably going to see it open right here and then just get bought up. It'll get bought up and launch all the way back up here. This giant gap down will get filled to the upside. Google is too strong of a company. But if it doesn't, if it somehow breaks under this trend line, then we've got a gap to the downside down at the 178 mark, which would line up this trend line here. Never got retested, and they always do at some point. So we could be looking at Google coming back down to the 178, 175 area before it bounces back up for more upside. And actually, as I'm talking about this, let's draw some fresh trend lines. And you can see there's a rising wedge again, just like NVIDIA, that we had not seen before. And if it breaks under that, then we might see even more downside than I think. I don't know what this old line is there. Get rid of it. Yeah, that's going to be very interesting to see what happens here. But for now, the short-term plan would be, as long as the price is above this blue trend line, it's probably going to come back up, and you're going to see a $10 or more swing in the next day or two, just with the volatility and everything. These earnings dips have been getting bought up very, very rapidly, and I expect that exact same thing to happen with Google. Microsoft, they had earnings, similar situation, giant gap down. I personally bought a lot more shares of Microsoft. I fully expect this stock to do really well. We've talked about it in other videos in 2025. Right now, in the weekly time frame, we did talk about this red trend line, this bear flag that had formed, and we've broken down under it. So it's quite possible that stock comes all the way down to the 370 mark, 350, over time if it chops all the way down here. Not a huge deal. I will just continue to purchase shares of it. Right now, we're hugging this blue trend line here. That was part of the diamond pattern that we had talked about. It's underneath the EMAs, so not the best looking sign on a weekly time frame here. But some positive news going for it is we have some bullish RSI divergence playing out. And what that means is, so I'm going to draw a trend line here. And you can see that the price had a overall downward pattern from this candle over to this candle. There was a lower price that was formed in a short period of time. Now the RSI down here is a relative strength indicator and usually gives us a sign of an interest in a stock if people are more interested in buying it at whatever current price it's in. And whenever we see a divergence where the lines are not the same, so you can see this line is in a downward slope, and then this line is more of a horizontal or slightly upward slope. Usually that means buyers have stepped in, and in the near short term, price is going to go back up. So it would make a lot of sense for the stock to come back up, and try to retest at the very least, the underside of this red bear flag that broke out. I fully expect that to happen sooner than later. Instead of just more downside. So that's some good news, positive news going for it. And if it can get back inside of that bear flag, if we can get the candles back in this range here, then this might be a good old-fashioned fake breakdown. And whenever that happens, it usually means a more violent swing in the opposite direction is going to take place. So let's see what happens over the next several days and weeks, especially with all the news and crazy things that have been going on lately with headlines. At this point, if you're still following and you haven't already subscribed, I would really appreciate it. That's how you can support me. Just subscribe to the videos. If you're getting any value out of this at all, I would appreciate it. Just hit that subscribe and like button and just follow along as I continue to do these videos, release my thoughts and opinions on what I plan on doing with different stocks and how I invest and swing trade and all that good stuff. Let's see where we're at on time. Doing good. All right, let's take a look at Tesla here, which we've talked about quite a bit. So Tesla has been getting beaten up in the more recent time over the past week or so. There was you see this bluish purple line here and here. There was a bear flag that formed that we had talked about, and it definitely played out and broke down. Price broke here, and you can see how it came up, retested the underside of it, just like we were talking about is going to happen with Microsoft. It came up, retested, more downside, which is fine. There was this red trend line here that from way back in December when it had its huge breakout, it hadn't been retested yet. And we finally got that retest down here. It took several months, a month and a half, I guess, 6 weeks to get that retest, but we finally got it. And we're bouncing off of it so far with a nice looking hammer candle. Which we've talked about in our other videos. If you don't know what a hammer candle is, just do a quick Google search. That's the best way to learn before I go into depth on it and waste 5 minutes talking about it. But nice looking hammer candle, kicking the price back up. There's a gap up here that needs to be filled, so we probably see a little bit more upside in the near future, back to the 400 price range. But we need to get back over these EMAs for more big upside. And on the weekly chart here, we've got a hammer candle forming again. So things are looking nice, and it could very well bounce and then give us another run up back towards all-time highs, potentially. But we'll see how things go with news and media and all that kind of stuff. And just real quick while we're doing the video, draw another line here. That'll be an important line to break over, in my opinion. Fill the gap, come up. We might touch this line, but we need to break through it before we can get excited about any more upside. But it's possible that this red line actually gets tested again. I would like it to get tested again. It would kind of... We want these trend lines to get turned into a nice support level, and the more times that it gets tested and buyers step in and the price bounces, it's just a good sign that it has turned into support. So I would actually like to see it get touched down here again below the 380 price and then take off one more time. So let's see what happens with Tesla over the next week or two. All right, and then let's talk about where to go. Well, there you are. Target we've also talked about, and there's a theme, I guess, with the video today of bear flags breaking down and being retested. But it's good to kind of just see these patterns over and over again, being able to identify them so you can see how the stocks that they all end up doing the same thing. You know, they're not exact, but they all rhyme, so to speak. So you're able to make more informed decisions when you start to see these patterns develop. And you can see again, you know, this bear flag that had formed, it broke down, it came up, it retested it, it rejected, and it's going back down again. I mean, it's like it's just happening over and over and over. So I just wanted to go over, you know, this theme one more time, and what Target might do in the near future here. I think now that we've gotten this retest and reject, that the price is probably just going to tumble all the way back down to the 120 area. It might take it a couple of weeks to get there. It might not. Who knows with all the crazy news. But since we did get this breakdown and the test and reject, I fully expect now for this price to come all the way back down to 120, which is would be a great area to look at buying some shares and holding for the long term. So we are going to just set an alert when price gets below a certain level here and plan on buying when it does. So yeah, that's the video for today. Appreciate you being here and watching along. Again, if you got any value out of this, if it's been helpful, educational at all, just hit that follow button, hit the subscribe button. Just really appreciate that. And yeah, be on the lookout. We'll try to start looking at some different stocks over the next couple of videos that we'll be doing. There might be a sector rotation happening in the stock market over the next several months with different stocks like pharmaceuticals or retail stocks or food and beverage, that kind of thing. Certain industries, the stock market goes through ebbs and flows, and certain sectors and industries get hot. So it's just always important to be on a lookout and keep an eye on different stocks and different possible trades and investments. So yeah, if you haven't already, one more time, subscribe, leave me a comment, let me know what your thoughts are, hit the like button, and yeah, we will be doing another video next week, so stay tuned. Thanks for watching.